You are going to spend your money not on the S&P, but on the S&Me. That you're going to spend it on you. You can double, triple, 10x your earning capacity.
Consistently buy an S&P 500 low-cost index fund. Keep buying it through thick and thin, and especially through thin.
In this video, I will give you my breakdown between Warren Buffett, the richest investor of our time, and Alex Hormozi, the $100 million man, have to say which investment you should choose so that you know which one to prioritize. And at the end, I will give you the strategy I choose for myself. Try to have a guess before we get to the end. Let's get into this. Warren Buffett's advice is to invest in the S&P 500. The S&P 500 is an index fund which tracks the 500 biggest publicly traded US companies. Apple, Microsoft, Google, and Amazon are all included in this big basket of stocks. It has been growing consistently with all the housing market, dot-com bubble, and COVID crashes included. Because most investors act very emotional and because it's very hard to pick the right winners, Warren Buffett suggests that 99% of all the people should invest into the S&P 500 and trust the US economy. This can all be done passively. This investment is typically used for long-term investment goals such as retirement planning. If you want to know more about the S&P 500, check this video out. On the other side, we have Alex Hormozi. For the people who don't know him, I'll link his channel in the description. Alex created a term, the SME 500. He refers it to investing in yourself. So instead of investing in the S&P 500, you invest in the SME. That means you invest to enhance your skills by reading books, blogs, watching videos on specific skills, and taking courses. I can see the comments.
Why would you pay for a course if there's an abundance of knowledge on YouTube all for free?
Simple, because a course will help you learning the wished skill much quicker. So you will pay for sure, whether it's money or time. And here's a little secret. You can spend infinite money, but not time. So the choice is yours. So which option is better, the S&P or the SME? It depends on your individual goals and circumstances. And here are some factors to consider. Potential returns, time horizon, risk, fees, and control. A very good thing about the S&P is the very good track record. If we look at the yearly return of the S&P 500, it has been growing over 10% over the last 70 years. Much more than what your friendly neighborhood bank gives you. The return of the SME cannot be defined because everyone is different and has a different set of skills. But if you look at Bezos or Elon Musk, you can see that nothing is impossible. You can take specific skills which can increase your income directly, such as learning how to code or becoming a digital designer. But you can also improve your communication skills, which will help you indirectly or increase self-confidence and a greater sense of purpose. You can use these skills to become a better negotiator for a better salary or a better job, but you can also become a speaker. The options are unlimited. Investing in the S&P 500 is not a get-rich-quick scheme. Investing in the S&P is a long-term game because of the compound effect, which is the main force of investing. It will show its power after investing for at least 10 years. And here's an example. If you invest $500 a month for 30 years, you will have invested a total of $180,000. But the total investment can go up to $1,140,000. So the total interest earned is $959,000. Thanks to the so-called compound interest. The SME can trigger immediately if you take a specific course to start a new job. Alex's example is this.
You could go and become certified as a phlebotomist and go from making $7.50 or whatever the minimum wage is to what phlebotomists make at $25 an hour. You would triple your earning capacity.
So it can be said that investing in yourself will have a quicker impact, but don't expect to take a certain course and that your income will triple tomorrow. Sometimes it needs a bit of time as well to trigger. Sometimes you need to stack up a few skills till one day you will break through. As investing can always be risky, so comes with investing in the S&P 500. You can try to time the market, but here's a tip from me. Don't try it, as most people cannot outsmart the market. For more tips, watch this video in which I talk about 5 common investing mistakes. There's always a possibility that tomorrow the stock market will crash. As just mentioned, no one can predict the market. But can the stock market go to zero? The possibility that all of the 500 biggest US companies will crash to zero is almost impossible. The only reason could be a third world war or that a million earthquakes and tornadoes are hitting us at the same time. And in this case, your money will be irrelevant as we will just fight for our survival. And how high is the possibility of those scenarios? Pretty low, right? Nowadays, there are a million courses and unis and books and videos. If you buy a course online, there comes always the risk that this person might be a scammer or the course isn't as good as you would expect it. But I bet even in the bad course, there's at least one thing which could be new to you. And if you have the right mindset, this will be irrelevant to you because at the end of the day, money will always come. Investing in the S&P 500 comes with some certain costs. There could be first your brokerage fees, which depends on your brokerage. By the way, for all my northern friends, if you want to get started, I'll leave a link in the bottom to start with Questrade. Also, hence the S&P is a fund that will be managing fees. But thank God it's all passively managed, not like a hedge fund. So the costs will be very low as to 0.03% per year. So it would cost you $3 for every $100 invested. Fees for the SME are much more transparent. If you want to buy a book, it'll be shown on the price tag. Same goes for any other course. The price will always be displayed. Or if you watch YouTube videos, this will all be free. All you will pay is your time and attention. Investing in the S&P 500 gives you the chance to invest in 500 companies at the same time. But you will not be able to choose in which companies you want to buy directly. You will always have to buy what comes in the fund. Also, another point is that you are also not in control of how the market or the companies are doing. You have to trust in the US economy that will do great like it did all the time. Investing in yourself is much more in your control. You decide what you do with your saved money or spare time. Are you using it to watch Netflix or are you going to pick up a book and read? In conclusion, both investing in yourself and investing in the S&P 500 can be effective investment strategies depending on your individual goals and circumstances. If you have a long-term investment horizon and are looking for a stable investment with a huge diversification across a range of companies, investing in the S&P 500 may be a good option. However, if you have a shorter time horizon and are willing to take on more risk for potential higher returns, investing in yourself may be a good choice. And this is how I invest. But before I reveal my strategy, hit that subscribe button if you haven't. The bigger this channel gets, the more videos I can share with you so you can learn more about investing, personal growth and money. As I see the huge potential growth of investing in the SME, which can 10x my income, but I see the almost safest way to $1 million with investing in the S&P 500. It is just a matter of time when I'll be wealthy. And this is why I invest in skills and courses first. And while I'm doing specific courses or implementing the new skills or just unsure which skill I want to commit next, I invest my money passively in the S&P 500. This way will guarantee me that the compound effect will work on my investments while I try to become a more valuable person. And as Robert Kiyosaki, Poor Dad Rich Dad said, you're just missing one skill to your breakthrough. Which option are you going to choose? Are you going a similar path as me, or are you just going into skills or just investing in something totally different? If you want to know more about index funds and how to get started, watch this video next, club.